Most traders look at candles, but very few know how to read them properly. Every candle tells a story about momentum, rejection, trend strength, and market behavior. Tonight, we're breaking down both standard candlesticks and Heikin Ashi candles and showing you some key clues traders use to better understand what price is really doing. Let's get into it.
Today's been a big day. Loads of different things in the back end. Like I said, we have a website that is ready for all of you to dive into. So we're going to get into some candles very soon. I'm going to cover some things and I'm going to hand it over to Dad after that as well. But firstly, I'm going to show you how you are going to be able to log into our brand new site, which I will be sending you access when Dad is doing his thing soon. So guys, this is the website you are going to be going to. So just write down trendforce.co/training hub. That is all you need to know to get to where we're going to next. So trendforce.co/training hub with a dash between training and hub. I'm going to push enter, and this is what's going to happen to you the first time. The first time round to log into our site, you're just going to use the email address that you had set up when you signed up on the website. So my example for me is just my own email address. I'm going to hit continue. I'm almost instantly going to have an email sent to me with either a numbered code you can put into this little number section, or you just click the link that gets emailed, which is now showing up here. So I'm just going to click the automatic button, which is going to automatically load a new tab and throw me straight in. Now, you'll probably never see this page again once you click in. You're just going to click on go into course, and then you are in. So guys, this is our brand new training hub. It's got everything all in one place. And I'm going to spend just 2 minutes going through so you know where to find everything. So homepage, this is the homepage. There's a little 1.5-minute video here with a bit of instructions. And obviously, if you're absolutely brand new to our community, a few little details like, you know, when we post Zoom links, when we post recordings, all that kind of stuff. Because I know someone might join and think, where's the Zoom link? That's normal. So a bit of info in there. And then also, if we have just had a training, this link right here, clicking on here will take you to whatever the training was. For instance, tomorrow, this will take you to the training from tonight. So you can click that link. And so if you clicked on that, it would take you to the latest training. Otherwise, clicking on 9 lives in the top left corner, that takes you straight to a page where you're able to download a copy of our book if you've not got that already. As soon as you hit download, that's going to load the entire book for you right there. So you can go ahead and grab yourself a copy of that. The student roadmap is next. That is brand new as well. None of you have got that copy. It's to do in line with all the most recent videos and whatnot. You can grab a copy of that and have it handy as well. Then underneath that, PDF library. This is a page dedicated to all the different things that we have got, like our day trading basics PDF, the system PDF, and again, just the student roadmap and things that are in there. Any other notes or PDFs from Dad in the future will come in here as well. You can click on that. It's going to instantly take you to that page, and you can download the entire PDF there. So everything is all in one place, guys. Same with the system PDF and all of that. Underneath that, you click the Training Hub button, and it's going to show you all of the different stages that we have. So again, that student roadmap stage 1 through 7. Stage 4 is basically actually trading and demo trading. So all of these are here with links to the individual groups of videos, so to speak, but you can click, all of these are also in this tab on the left. So foundations, they're all over here, but if I click on foundations, it's going to take me to that page specifically. There's the 4 videos there. These are also brand new. I don't think any of you have seen these. I reshot them all, made them a whole lot shorter, so you can watch all of these in, I think, 48 minutes now with a little intro. Trading View, these are 4 brand new Trading View videos that I guarantee none of you have seen. And yeah, that's just a link to take you off to Trading View if you haven't got an account with them, so that'll load that. Otherwise, guys, these videos, each one of these is very detailed, and also with timestamps underneath showing you everything in the video with the exact moment of when it's covered inside the video. So there are all of those. I think specifically how to demo trade is going to be, for a lot of you new people, a really, really helpful video. So I'm showing in there some tricks that I've never shown anyone before that I learned when I went down this rabbit hole of refining this process. Again, timestamps on everything. Everything is typed up so you can find exact moments. And then the 4th video in there is just me trading gold, NAS, and the Dow simultaneously during an Asian session. So NAS and Dow weren't spectacular, but we still got some winning trades during this. And again, timestamps on everything. So how to place limit orders, how to do market orders, and how to do some pretty funky things in TradingView that never knew before. So there's those. Then the system, next stage in here, these are our videos that some of you may have seen already. 6 minutes of Dad teaching the philosophy of TrendForce Pro, the 30-minute walkthrough of the indicators in a lot of detail, the video on the rules, and then the 7-minute video from last week showing T1 and T2. So that's all in there. Then advanced training, that is where we put all of our weekly trainings. So these are from the last few weeks. Last week's Spot the Auction one is in there. So after tonight, you'll be able to click in here and see whatever we did tonight. And there'll be a full write-up beneath here with the latest training sitting in there. Then I have split stage 5, which is advanced training, into the practical trainings, but also trade psychology I have kept separate. So all of our mindset trainings are going to be in this one. So if you just want to go and refresh some mindset stuff, those are all going to be in this tab in their own spot. And then some market analysis Zooms. I've got one in here at the moment, but now that we've got T1 and T2, we'll be putting a few more in here in the future. So that is our new members portal where you can find everything. All of our training, all of our documents, everything's in one place. And so if you, for instance, first time, if you need to log in or click on any of your details, you'll be able to put a name here, put a picture here if you want to. You don't have to, but you'll be able to get into your own account details, sign out, sign in. And again, it's as simple as putting your email address in that you used to create your account when you first joined through the website, which is why I've been moving all of our original members over to the website lately so that everybody can access this. So that is that. So I'm going to now get back into TradingView and get into some candles before I welcome Dad on. We are looking at candles this evening. So some of you are going to know all of this, and some of you are probably going to know none of it because Dad's going to get into a little bit of Heikin Ashi stuff for us as well. So something new that I'm toying with right here is I'm going to just throw an image onto the chart quickly. Yes, it's going to work. Okay, so all of you have, I'm pretty sure, seen this, Day Trading Basics, page 20, showing the absolute basics of candle anatomy, guys. So tonight I'm going to do a tiny bit on normal candles, and then Dad's going to rip into some Heikin Ashi stuff for us. So candle anatomy, I'm sure everyone on here knows this, but we have a body and we have wicks when we are looking at standard candles, so just normal candles. And when you're inside TradingView at the top, this is all the different kinds of candles that you can select. You could select lines, you can select hollow candles, bars, Renkos, and Heikin, all sorts. So I've personally starred Heikin Ashi, and I've starred normal standard candles. That's why they show up here for me. So we'll keep that as it is. Just being able to see this if you're absolutely new, we wanted to do one training that includes this as well. So in Day Trading Basics, page 20, video number 2, there is a breakdown of this. But you can see obviously here we've got these blue candles, which are bullish, representing price opening low at the open price, and the close, the top of the blue body being where that candle closed, and the thin skinny wicks just show how high or how low price went during that particular bar. So if we zoom in to a candle in real time over here, and I'm going to get my measuring tool, just looking at this green candle right here, you can see that if we measure, I'm just going to try to make this even more exaggerated so we can see the one particular candle. So if we are measuring this, we're going to see that this candle to the left of it opened at this level, and it closed at this one, and then the next candle opened over there. But now this candle opening went as low as the bottom of the wick, went as high as the top of the wick, closed at the top of the body, and then our bearish candle opened here, closed lower, and that's why it's red. So that is the simpleness of standard candles, guys. They are either solid bodies where they open and close, and they have their wicks. And now the big difference with Heikin Ashi candles is this. Flick over to Heikin Ashi, and then I'm going to hand over to Dad pretty soon. So now some of you may have noticed that these candles just changed. So notice all of these green candles. We have even a reversal pattern right here of a bearish Heikin Ashi flat top. So there's no wick on top. Pushes down, you've got a little bit of a wick down the bottom, then a doji, basically like a spinning top, a hyper compressed body with wicks on both sides, and then a flat bottom bullish Heikin Ashi candle. And that's a very common reversal pattern that we talk about all the time. And so if I jump back to normal candles, look at the string of green candles the whole way to the top, flicking back to normal candles, we have some red ones. You can see totally different story being told here. And yeah, like I said, a couple red ones in the middle. So the reason, well, I'll let Dad explain why he loves Heikin Ashi, but you can see the difference. You see a lot more information in these candles, but you can sometimes be freaked out by some red ones if you are new. And obviously Heikin Ashi candles keeps things very smooth, all bullish, flat bottoms the whole way up to the top, and then again, red ones the whole way down. So you can see only one green candle in this left mix coming down here. Just one almost green candle. If we go back to normal ones, look, there's 1, 2, 3, 4, 5 on that move down. So they have some pretty amazing math behind them. And I'm going to drop one image onto this chart right now, which shows you that math, which I don't expect all of you to ever think much about ever again. But it is pretty cool to understand them, because once you do, you'll know a little bit more about what you're looking at. So here is the maths behind Heikin Ashi candles. And if you Google it, you can find this image probably for yourself. But hopefully you can see this loud and clear. So the math behind the candles. So the open of the candle, you can see that all of these candles are pretty much opening on the right-hand side here in the middle or the center of the body to the left. And if you haven't noticed that already, we can see that the maths of which is the open of the candle, is determined by the previous bar open price plus the previous bar close price. That's giving us that open level. The close level is a quarter of, and again, this is where it starts to get nerdy, the current bar divided by the open plus the close plus the high plus the low. That open, close, high, low, those are the 4 most important levels that are determining almost anything on a chart that you're looking at. And you can see at the top of my screen up here, next to the little green icon, if you click this icon, this is what's telling you how long until the market closes. I was talking about that with someone on the weekend, and it'll tell you a few minutes, like 30 minutes until the market opens if it's closed, and it'll be gray. But next to that, O for open, H for high, L for low, C for close. If I highlight any particular candle here, a green one, now I'm going to go to a red one. Notice how they now all go red. They're giving me the exact levels of these candles. And so those are the levels that are determining the maths inside of these calculations. And so I don't really expect any of you guys to memorize all of the math behind how Heikin Ashi candles are derived, but you can see here that this is the genius behind the guy who figured it out. And it really does help in terms of staying with momentum and identifying momentum while trading and not getting faked out by standard candles. So again, the high equaling the max, and then the current bar and all that fun stuff times the highest of any of these values, the low equaling the minimum times the current bar open, close, low times the lowest of any of these levels. So a little bit of nerdy math for those, and you don't need to memorize that. I'm going to delete those, get them out the way, and just if you play around with yourself, just jumping between normal candles and Heikin Ashi candles. I know a lot of us like to obviously split our charts in two with the way that we trade, and so some of us might decide to have one side in Heikin Ashi, but on one side you might have Heikin Ashi, and on the other you might have standard, both on a 4-hour, and then you'd be able to see them, and both on the right chart. There we go. Both of those now showing the same information, showing the exact same story, but different candles. And so if you're ever trading and you have a 1 minute and a 3 minute side by side, I personally still like to have my 1 minute in normal candles, but you might like to have both. So I'm going to leave that up to you, but I think it's time to get down on here to talk about why he likes Heikin Ashi candles, and to also give us a bit more info and insights as to the genius that he's discovered with how wicks behave. So let me unshare my screen. And Dad, if you are here, I know you are somewhere. I'm
definitely here.
Get you onto this chat and on the screen.
All right. Well, are we ready to jump into Heikin Ashi? So where do I start? Well, first of all, it's personal preference, whether you use Heikin Ashi or normal candles. It really is personal preference. Some people use both. I obviously lean strongly towards Heikin Ashi, while Ty leads strongly towards just normal candles. So I changed to Heikin Ashi quite early in trading when I started trading. So, I mean, if you just look at this big chart and I click on normal candles, you can see there's far more noise. We'll get into more than anybody, but so this is how I used to see a chart. And the first time I clicked, when I discovered something called Heikin Ashi, when I clicked on it, I just saw, gee, all the noise went. And that kind of got me hooked. I don't know if I'm a bit OCD or CDO, as some people say, but I just liked the less of the noise. I mean, I think my weakness is that I kind of have a bit much on the chart sometimes. And so I just found with normal candles, it was quite noisy. So anyway, I mean, these are old, they were invented by a guy called Munehisa Homma, he was a Japanese rice trader in the 1700s. So these candles are 300 years old. So it's not a new invention. They've been around for a long, long time. So nothing new, in case you thought they were invented in the last 5 or 10 years. They are 300 years old. And so basically, I mean, the Heikin Ashi, not to get confused with Heineken Asahi, that are 2 beers, it just means average bar. So, I mean, the whole point behind Heikin Heineken, I was going to say Heineken Ashi. The whole point behind, I can't say it now, Heikin Ashi is the smoothing price action. All right. So that's the main reason why some people, a lot of traders, go for Heikin Ashi candles. It really is really smooth, and that means less market noise. But I think one of the keys is it's also very easy to recognize the trend because it filters out noise and it's smoother. You get a lot of candles. We'll look at some examples that are the same color for longer. So often there's no need to exit a trade with Heikin Ashi candles if the candles are the same color. And so you can stay in trades longer. That's what I found. In early days, if we just change this back to normal candles and you were in a trade, I know it's very easy looking back when there's a big trend, but I often just like to cut the picture off. You were in a trade here. There we go. It's going up, going up. Then the first, there are two red candles. I think, well, now it's pulling back. I'm going to take my money. Oops, going up again, pulling back. Oops, I'm out of this trade. Oh, it's up again, down again. You can see here, these pullbacks here with normal candles, I won't circle them yet. Look at that pullback, there's a pullback, small, there's another pullback. I found it harder to stay in trades longer. And I think that's, especially for beginner traders, staying in it, having the confidence to stay in a trade longer is something that is a skill that grows over time. So if we just let me just circle this patch again. Where's my drawing tool? So if you look at this patch over here, let's cut out the one. Let's just look at this. So that is with normal candles. If we change to Heikin Ashi, you can see, well, actually, I'm going to really milk my preference here tonight. So let me just delete this and I'll go, of course, not playing game tonight. All these technical problems, let's delete the two brushes. Okay, so if we circled this trade from the first green candle to the top of this move up over here. So if we look there, if you count the bearish candles, there's only 4 bearish candles. So with Heikin Ashi, you can identify a strong trend. Again, looking back, it is easier. If we change that to normal candles, so we had 4 bearish candles before, now there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So there are 14 bearish candles compared to just the 4 where we were with Heikin Ashi candles. And you can see all the bearish candles here are not really significant. There were 2 in a row, but quite a few times with the normal candles, there were 2 in a row more than once, which would make you want to potentially exit the trade. So that is some of the key reasons. The other reason why I found Heikin Ashi candles nice is because of trailing a stop loss. So once the trade gets moving, you can use the base of the candle to trail your stop loss. And especially I'm on a 3-minute chart. On a 1-minute chart, if we looked at let's just highlight that move on a 1-minute chart. It won't be as smooth. Sorry. Let's go. I'm going to be clicking around a bit, so just be patient. Let's just identify this move on the 3-minute. So this is this move you're looking at. Then we'll change back to a 1-minute. Look on the 1-minute. So you can see over here, this big move. Obviously on the 1-minute, the pullbacks will show as bigger. But if you were trailing your stop loss, if you use the base, you can see for bullish candles, they've got flat bottoms. So very often you just trail your stop loss at the base of a bullish candle. Every time there's a flat bottom, you trail your stop loss. And generally, if you do that, you don't get stopped out, especially I always, as you know, trade with a split screen. So especially if you use the 3-minute, if a trade's really running in their nice, say, bullish candles, here's the 3-minute chart. If you just trail your stop loss at the base of every flat bottom candle, generally you can stay in the trade longer. So you can almost chase it all the way up. I mean, we've got our exit candles too that help. But those are some of the reasons I found it much easier. If we go back to normal candles, you can see it's a bit hard to work out where to put your stop loss. These pullbacks could have caught you out, and you often don't know how. Obviously, you do get engulfing candles with normal candles, but it's much easier, I find, trailing a stop loss. So let's go back to normal candles. and we'll keep that for now. So again, the trend strength is the easiest. I've been looking at the bullish trend when there's a bearish trend, when the candles, I mean, this is maybe not the highest volume to trade, but you can see where there's a nice trend. So let's look at this trend over here. Let's just highlight that. With Heikin Ashi candles, it's way easier to stay in a trend. So if we look at this here, we can see here, well, if we just take it from that candle, I don't know how many candles there are. Let's quickly count them. There were 19 candles. So if we entered, ironically, this is the trade I took this morning. I entered on that candle, but the time was, I had to walk my dog. And so I trailed my stop loss and I got stopped out. There was the H1, one of the H1s was right over here, and this candle here stopped me out. And I got 25 pips, but I was impatient, it was getting late. But anyway, that's besides the point. We can see here, how many did I count? 14 candles, this nice little bearish move, 19 candles. If we went to normal candles, we can see going back now, we can see, look at that, would have been way harder. And remember, each one of these, I'm on a 3-minute chart. That looks like, quite a nice bullish normal candle. So there were no bearish candles in that move down. And here there were, no bullish. There was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. There were about 12 where with normal candles, there were none. Okay, well, let me just move this. Can I move that in? So there were way less. So let's say there were 14 there, and let's just take it from, let me just draw a line to be accurate. Just want to really make a point here. We'll shut it off there. So back to normal candles. In that same group, we can see there were 1, 2, 3, 4, 5, 6, 7, 8, 9. There were 9 bullish candles in that move, where with Heikin Ashi candles, there were none, all red. And that's what I use that a lot. So if I'm in a trade, and as I get more mature as a trader, I obviously like to stay in longer. But as long as the candles stay the same color, there's a good chance that that trade is going to continue. So that is the big thing. It's way, way easier to read the trend strength, especially when you look at, or actually, I should have kept the circle on. Let's just pick up this one because I was in this trade, because there are not many different types of candles. They're either bullish, bearish, or doji. And so when you've got flat tops, that generally means there's stronger momentum. So from this candle, the first doji came way down here. You were almost 30 pips into this trade before the first doji. So no bullish candles appeared. And especially when you see a big candle, the best you want to see is a big body and small wick. Okay, that's a bit of a big wick. But here, here's a good example. Look at this candle. I'm going to make it really big. When you see a big body with Heikin Ashi and a small wick, that generally means the start of a stronger trend. In this case, we're looking at, this is a very strong bearish candle. So after that candle closed, we can see that went down 55 pips. Again here, we're looking for big bodies, small wicks. Okay, that's quite a big wick, but there's a big body, small wick. So they're very good at measuring trend. Okay, there was a pullback, but there's another 65 pips. So when you're in a trade and you see these nice big bodies and small wicks, it means great momentum. So look at this pullback down here. There's a bearish doji bullish. There's a nice big, look at that, nice big body with a small wick. Hopefully you can see it on the zoom. Big body, small wick, big body. Also in relation to the size of the candle, not too big. Big body, small wick. Okay, there we got some dojis. But if you look there, that move, we can see, 40 pips there. So I'm always looking at the size of the candle, especially if you're moving towards a target. Now, I haven't got the indicator on now, but let's just say your target was over there. Okay, there's a nice pink line. So if your target was over there and you're in this trade, and you start and you see, should I take the money? Look at that big body. Okay, that had a big wick that could make you nervous. Here, this candle will open here. Big body, small wick. So I'm always looking at the size of the bodies relative to the wicks. And when you see big bodies with Heikin Ashi, that means it's a high probability that trade's going to keep moving. So I'm always looking for that in trades. Looking, when you see these kinds of trades here, look at this. There's a flat top, flat top, flat top, flat top, flat top. And there the bodies are quite big. Okay, there's your doji. There's quite a big body. Doji, big body. That means it could still go low, which it did. So that's what I like. I just find it very, very easy to read when I'm in a trade. I'm looking at the bodies and I'm looking at the wicks in comparison to the size of the bodies. So often, with normal candles, it can be harder to stay in those kinds of trends. So let's just pick this one. Looked at, there's a beautiful trend, all red candles. So if we just highlighted that one, okay, that wasn't a big move, but let's just see from that bearish candle down to the bottom. Okay, 55 pips. That would have been pretty easy to stay in just based on the red candles. If we went to normal candles, we're going to have to just scroll back to find that little move. Where was I looking now? You can see here way harder. You can see this is the same move with normal candles. You were thinking, is this trade reversing? And remember, this is over 3 minutes. This candle's plotted. We're on a 3-minute chart. You'd be thinking, I better take the money, or I better close out the trade. Better close out the trade. But when we go again, we look at the Heikin Ashi candles, we can see with that move, there was just great momentum. So it's way, way easier to read trend strength. Look for the moves where the candles plot in the same color. I mean, do your own back testing, but if you scroll back, you can see, I mean, here, look at this move. Let's look at this whole move here. We'll look at another one, just being very practical tonight. So if we went from the top green candle to where we started over here, okay, that's a big move. So if we looked here, so here in this big move, there were only 3 red candles. So if we change that to normal candles, and let's scroll back to that big move, look here, look at all the bearish candles. So there were only 3 reds. With Heikin Ashi, here's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 3 compared to 13. So, I mean, that was just my experience in my early years of trading. I found this kind of move way harder to stay in compared to, let's see where we were, although there's a lot of dojis, so it's not the perfect example to look at, but the fact is they're still green. So that is the real key, that you can stay in trades, way, way longer. And dojis are warnings. Okay, there was a lot of range there, but if you're in a trade like this, you can stay, no need to move your stop loss until the first doji. There's a doji. So maybe think and move your stop loss. There's a flat, you can hang back. There's a doji. Once it moves, the bearish ones are showing stay in the move. There's a little pullback doji. So anyway, those are the reasons, that I find it way easier to read the trend, stay in trend, less likely to pull out. And I find it way easier. And so I've already covered some of the candle looks. So it's very easy to identify strong candles. So again, I've mentioned that already. When you've got big bodies and a small wick, those are the ones to look for, especially at the start of a trend after there's been a reversal. So here we'll look at the reversal pattern in a minute, but I'll just make this really big. Here's a really good example. So here we've had a little bearish move down, and then we got our pattern we're going to identify. Now look at this. If we're looking at a bullish move, the first bullish candle this is the real key that I love about Heikin Ashi. We've got a big body, small wick. That's a very good sign there's going to be momentum. And again, nice full-size body, flat bottom, big body, small wick. So if we entered there, there was a good move. There was, 40 pips in that move. Identifying the first candle in a move with a flat bottom, it's a real key. Again, we can see this move here. Okay, we're getting near the open, so some uncertainty. But if you just scroll back, there's so many examples. Here is a classic, Heikin Ashi move. You got flat top. Your first doji is way down here. And even if you're trailing your stop loss, for a bearish move on the flat top of each candle, you would have halted there. No need to move. You wouldn't move your stop loss. You got 2 dojis. You could drop it down there. You would have got stopped out here. And look, you would have all the pips. If you'd entered on that candle there, you would have got stopped out. If your stop loss is there, 68 pips. So again, it's easy. I find it easy to read the candles. And again, in a move, when you see the candles getting bigger, so we can see you can see that candle, each candle is getting bigger and bigger. that means momentum is increasing. So it's not just trend, it's also, so, and this is a great example, that the momentum is increasing. Let's just highlight this and let's just see what that would look like with normal candles. So we'll just highlight all these nice bearish candles. So we are at 1912 on Monday, just so I know where to look. So if we go back to 1912 on Monday, I know we're further back. Here we go. So you can see it's a bit, I find this harder to read, Okay, in this case, it's a bit of a thumbs up for normal candles. It was a smaller pullback there. But again, I was often unsure how to move my stop loss trailing down. So I find that is harder to read than, if you get that picture in your mind, let's go back to this move. I find that so easy to read. And so there really are only, 4 kinds of candles. They're either, you've got bearish, a strong bearish candle, flat top with a wick, and you've got a doji bearish candle. And then with the bullish candles, you either got a bullish candle, flat bottom with a wick, or you got a doji bullish candle. So only really 4 kind of candles. Because when I first started trading, I need to watch the time. I'm getting so carried away. I'm getting a higher talking about my favorite candles. When I first started trading, I ordered this book from Amazon. It was still hard copy time then. And man, there were just like pages and pages of different candle types that I found quite confusing. So anyway, I hope you're getting sold. Let me clear the chart quickly. Then we're going to look at one of the big highlights of Heikin Ashi, and that's the reversal pattern. I haven't highlighted any before, but what Heikin Ashi are known for is for the famous reversal pattern. Now, if you've been, with our strategy a while, let's just get back to the live chart. There is this classic reversal pattern that we see often with Heikin Ashi candles. And this makes it very easy to determine whether a trend is reversing and turning around the other way. And so the pattern is, if you're looking at a bullish reversal, it goes bearish, doji, bullish. Now, the higher the time frame, the easier it can be to pick it up. So it won't happen on every move, but if we just highlight at the top of this, there was a bullish move, then let's have a look at this pattern here. And I want to also highlight something else. So we can see with this pattern here, this is the classic reversal pattern. So there we got a bullish candle, then we've got what's called a doji, then we've got a bearish candle. So very often we can see when a move is ending. And also I wanted to highlight wicks. I don't know how much time we'll have tonight, but where you start getting wicks that are bigger than bodies. So that's quite a big wick, this last bullish candle there. You often trades end with a climax with a big wick, and that we can determine also that the trade's expired. But this pattern is amazing. So I use that a lot. We can see here's another one down here. It didn't start off perfectly. If we highlight this one over here, we can see there was at the end of this move, there was a bearish candle, flat top, and that's a big wick is a good sign there. That wick is bigger than the body, and that one too, big wick. That means the trade's coming to an end. Once you start getting big wicks, and often it's price reaching for targets. But there we see bearish, doji, bullish, and the trade reverses. Sometimes it's more subtle, and you also look for them in pullbacks. And now I don't re-enter trades like I used to. So often what we used to call a pullback actually is often a retest of a level and time to enter. But here again, once you see them, you can't unsee them. Here's another nice reversal pattern. So we can see this is in a pullback. Price moved up, and there we got bearish, doji, and bullish price came down. So you see them everywhere. They're often more visible on higher time frames. But actually the key, let me, before I delete this, the key is I often enter trades on this pattern, provided there's a key level. So let's just imagine this is the prior day. There was a prior day level that was tested again, and it may have been anywhere in this vicinity. So when I see, so let's just say this was the prior day high, for example, and price came up, it tested, rejected, multiple tests rejected, And then we get this pattern over here, bearish, doji, bullish. Often that's my entry candle there. That would have made a great trade. There was 50 pips in that move. So we don't often see, I mean, look, there's no hard and fast rule forever, but we can see these first tests didn't produce a reversal pattern, but here we see that reversal pattern. So that's what I'm always looking for. If you just look back at often all the big moves have that, especially on the high time frames. Look, there was this, I mean, it's just everywhere. I mean, look here, I haven't even prepared this. I'm just looking. There's one over there. And there, look at the top of this big move. Here's one over here. So especially, I've found this, I mean, I've always loved this reversal pattern, but especially now that we are looking for rejections or continuations of tested key levels, our key rule, it is fantastic. And so generally, I can only think of one trade in the last few weeks that I've entered on a doji. You know, whereas with normal candles, almost every candle is a doji. It's got wicks on both sides. I'll always wait for example, if I'm going to take a sell, I enter on the first flat top, or if I take a buy, I enter on the first flat bottom. Especially, that's what I love about these candles. And I'm just trying to see if I can find an example. When it's been, look, I'm just trying to find one quickly, but I can't see one. So you're going to have to imagine. Okay, here we go. Here's one. Yeah, look at this. That's a good coincidence. So when the market is, also what I like about these candles, to keep an eye on the time, is when price has been ranging. So if you look here, now this is just the fake level I've added. We can see here the market moved in range. So we can see here price came down to this level, and there were multiple tests. And let's just say we're looking for a bullish move. I always wait for the first flat bottom candle if it's rejecting a level. So let's just say there was a nice little cluster over here. There was a prior day high. There was the prior week VH. Oops, there was a whole cluster. And you were looking to move to the upside. I always wait for the first flat bottom candle before I enter a trade. So here's a great example. So I wouldn't have entered there or there. That's a doji, risky. Those are bearish. There's a doji, boom. That would be my entry candle, the first flat bottom. And this is a great candle. Look at this candle. It's got a nice big body. So very often, the moves do start with a nice big body. That gives me confidence that this trade's going to move. So that's what I'm always looking for. So if we also go to a higher time frame, let's delete these drawings. So the higher the time frame, the more clear the pattern becomes. So we'll do the opposite. If you go to, let's just delete this too. On a 1 minute chart, it's less obvious, although you still get them. But if we just turn to a 1 minute chart, you will see quite a lot of them. So they're everywhere. You often find them in minor pullbacks. I'm just trying to have a look. I don't know if I find one. But you often find them in smaller pullbacks, and you'll find a lot more. But the higher the time frame, the more accurate they become. So if we just change to, let's have a look at this hour chart. So if you're doing your analysis, you can see here is the trend. Yeah, look at this. Look, there is one there. That trend reverse with a bearish doji bullish. This trend reversed with a bullish doji bearish. This trend reverse with the same. So, I mean, that's just 3 in a row. So they're very good determinations. So if you wake up in the morning, you're looking at the charts to see, and maybe you are, at the moment, this candle is plotting. That candle's plotting, you work out what's the market going to do? Well, you can see this is a high probability, a move to the upside. There we got the bearish. There's a tiny little wick. I didn't see that. I think there's one popping up there. You might not even see it. But let's just imagine that is the reversal pattern. That's going to move to the upside. Likewise, here's a better example. You turn on the charts. You're right now at whatever time this hour one is plotting. 8 o'clock in the morning, you've just turned the charts on. Late start to the day, but you've seen a bullish, doji, bearish. There's a high chance you're only going to look for sells. That's what I would think. I think with that pattern on the 1 hour, I'm not going to look to go long to take buys and look for sells. So, I mean, you'll see them, they're almost everywhere. And they often, oops, let me get this tool off. So I am always looking for that reversal pattern. I found them incredibly helpful. And the dojis also tell you too, even if, that's what happens when you leave the tool on. I've got to right click. Okay, now it should be off. There we go. So again, the dojis also mean indecision. So if you are in a trade and there's been, let's just find a string of, gee, that would, all this is the hour chart, remember? Let's just go back to a 3 minute. So I think I've illustrated, in fact, if you even go higher, if you go to a 4-hour chart, let's just have a look. You can see very often you get here, here's a good reversal pattern. Look here. So this is the 4-hour chart, bearish, doji, bullish. There's a nice reversal pattern. That one's not quite, but you'll see on every here, look at this. Here is kind of a 4-hour chart, but a pullback. There is a bearish, doji, bullish. So that's on a 4-hour chart. If you looked on a daily, what I like about this pattern, now, I'm not going to talk a lot about wicks, but I'm always looking at the size of wicks. When I see a wick that big on a candle, that clearly shows sellers try to push price down, buyers said no way. So when you see a big wick, it could even be on the last bearish candle. But when you see a big wick like that and a reversal pattern, high probability it's going to move the other way. So I'm always looking at wicks. So let's just go back. We're almost out of time here. So I don't know if there are any questions. I've just been rattling away. He's maybe busy or he's not working.
Just a couple, but I'm sure you'll see them when you're ready to see them.
Yeah. So basically so the pattern works best on key levels. I think I've made that point. So when you see the bearish doji bullish or bullish doji bearish, look for it on key levels. So not just taking them in the middle of nowhere. So sometimes trying to see if there's an example. Often if there's a pullback, you may see one. I mean, I'm just looking very quickly. I mean, you probably won't see one now, but with pullbacks, they're not as reliable. But when they're on key levels, that's what I love about combining Heikin Ashi with our strategy of only, looking to enter trades where price is rejected and tested key levels. So also, again, I'm just going to say a few more things. If you are going to enter a trade, so let's just see where I was this morning. Was that my entry candle? A 3 minute, yep, I entered on one of these candles this morning. Yeah, it was this candle I think entered. I never enter on a doji, always wait for a flat top. I wanted to say something else, but I just forgotten. And also, there's this good rule is I try and avoid late entry at all costs. So the further you enter a trade away, and now we're talking Heikin Ashi, but it'll be true for normal candles. But the easy thing about Heikin Ashi is once you start entering a trade on a candle like this, it's already the third flat top candle. That becomes a late entry. So when I enter trades, I'm always trying to enter on the first flat bottom. So let's just say there was rejection over here, price rejected. Sometimes I wait for the first flat bottom. And if we're looking at this trade over here, I want to enter as close as I can to the first flat top, because remember the flat tops after dojis represent the start of a move. So generally, the advantages are there's less noise, you stay in trades longer, trends easier to see the reversals, and it also takes the emotion out because you can see, a lot more same color candles. It takes emotion out. The little key, it doesn't make a big difference, but there's one setting that if you right click anywhere in the chart and you go to settings and go to symbol, I have this checked on real prices on price scale instead of Heikin Ashi. That's a standard setting. If you uncheck that, you'll see there's a Heikin Ashi price. Sometimes it's different. Now there's 86, 87. So sometimes there can be a slight difference, but I'm not exactly sure how that works because basically whatever candles we're trading with, the price you see is the current price that the feed, is feeding us from your broker. So I think, that's all. The other disadvantage is that, small reversals can be hidden, so often because you have a string of same color candles, it may hide, small reversals. Then the other disadvantage, the advantage is the reversal pattern, but the disadvantage is you sometimes will enter one candle late. So that is the disadvantage So here is let's just take this as an example. I haven't tested this, but here we got the classic reversal pattern. We got bearish, doji, bullish. Now, most of the time, the doji is more of an engulfing candle. So you would enter on this candle with Heikin Ashi, but with normal candles, that's probably going to be your entry candle. So let's just go to normal candles and let's find out where that circle was. Yeah, you can see here. So that's quite a strong, not quite an engulfing candle, but that is quite a strong bearish candle. So if you had rejected a level, that could have been your entry point on a normal candle. So that is the one disadvantage. You tend to enter one candle late. But I'm kind of aware, I know automatically that when you got bearish, doji, bullish, the doji is an engulfing candle. So, Ty, we're running out of time. I haven't got to our bright candles, but we can maybe save that for another training. I don't really need to cover that.
Yeah.
So are there questions?
A couple questions there. One from Mark, one from Vickers.
Okay, I saw Vickers earlier. Okay, Vickers. Okay, so the question here, on a 3-minute candle, do you only enter when the candle closed with a flat bottom? If you can get a wick while the candle is still printing? Yeah, I mean, I tend to wait. I'm quite patient. I tend to wait unless there's been like multiple tests. So, for example, I mean, here, I'm just trying to find not the best example. You can see this level here has had multiple tests. We got a big round number here. Let's just move that on the big round number. So here, this is a big round number test. So generally, if I was looking to go short here, take a sell, I would tend to wait for the first flat top. That shows momentum is taking off. So I tend to wait for that, especially if it's ranging. But I did show a trade recently I took where there was only one touch. There was a big wick. So there was two things happening. Let's just pretend this is a bad example. There was like a moving average moving like that. Plus there was a level, and the price had detected a level further back. And I just entered as soon as the wick, I saw this big wick. And I just knew, just from experience, that big wick was going to signify reversal. So as this wick hit the line, I pressed buy and it ran. So I don't always wait when it's very clear. If there's a key tested level, and again, this level was tested further back. If you imagine it testing this EMA and then it came to another key level. Sometimes I get in without a test if it's tested it before and there's a nice big wick and I go to the upside. But most times, if it's ranging, I wait for the first flat top. So I haven't got a single rule. It does depend on circumstances, but more often than not, I'm either looking for a flat top for an entry or a flat bottom before I get in a trade. How about long or big wicks? Yep, so big wicks, that's a good question. Wicks are dangerous. So when you see a big wick like that, so this wick is way bigger than the body, that's a liquidity grab. So here, buyers were trying to push price up. Sellers said, no way. So whenever you see a big wick, when you enter a trade like that, that can also mean you didn't wait for a flat top. A big wick means that trade's definitely going to move the other way. So that it'll buy into the big grab and then it reversed down. So wicks are huge. I always look for big wicks. Trades normally end with big wicks. Like, look down here. This was a big grab. That was the low. That candle came, 15 minutes before the first bullish candle. So when you see those big wicks, that's when I move my stop loss down quite quickly, because there's a high chance that's going to go the other way. Very seldom do you see a big wick with like a big wick like that, the wick bigger than the body, and you get a continuation. That's a sign of expiration. The trade's going to reverse. Someone sold, Jeremy E. sold, and yeah, I've got some converts tonight. That's the success. I'll do a hand count. You're going to put your cameras on. I'm going to say who accepts Heikin Ashi candles. If you put your hand up, then you're being converted tonight. Okay, have I covered them all?
I think so, Dad. That was awesome.
Okay, well, there we go. I'll hand back to you, Ty, and unshare. Stop share.
All right.
There we go.
Put myself back
you got
on
the power.
And turn the camera on. Yeah, guys.
There, we can see you. We can see you.
Thank you, Dad. That was gold. I'll unpin you. But, right. You should all have access. I have double checked. I have enrolled everyone on my end. I can see everyone's email addresses are there. So you may have got an email already to say you've been enrolled in it. If you haven't, head over to that link that I just posted in the chat as well, trainforce.co/training-hub. And then from there, you'll be able to log in, guys. So I'll also post some instructions into the group chat But get into it. Go and dive in. Work through some of those videos. Like I said, you've never seen those TradingView videos. So even if you've been doing this for a while, there might be some hacks in there for you as well. Otherwise, that is more than enough tonight. Yep, email received. Brilliant. Thanks, Michael, for confirming that. Love it. Absolutely love it. Yeah, and check your spam folder, because I guarantee almost all of the emails that, like, even when someone's brand new and signs up, the first email they receive from me seems to just not get through. So start at, make it important, do whatever you need to so that the future ones show up. But you should all have, if one of you got one, almost all of you should have got one to whatever email address you used to sign up with. So if it didn't work, let me know and we'll figure it out in the morning. But otherwise, guys, that's more than enough from us tonight. Thank you for joining us live. In the meantime, trade safe and we'll catch you soon. Thanks, everyone.
Thursday morning.
Yeah, Thursday morning. All right. Good night.
See you guys. Good night. Thanks for joining us.